welcome to this deep dive into
Yeah.
Erin Lowry's Broke Millennial Takes on investing. Now, you might be thinking, investing? Is that for me? But trust me, Lowry's approach is all about breaking down barriers and making investing accessible to everyone, regardless of where you are on your financial journey.
Absolutely. And I think she does it in such a relatable way. Like,
Yeah.
it really is like having a conversation with a friend at a coffee shop.
Yeah. And speaking of coffee,
Okay.
one of the things that really stood out to me was Lowry's emphasis on being ready to invest.
Mm-hmm.
It's not just about throwing money at the stock market and
Yeah.
hoping for the best.
No, not at all.
It's about laying a solid foundation first. What are your thoughts on that?
I think that is one of the most crucial points that people often overlook.
Yeah.
You know, they get so excited to jump into the
What?
world of investing.
Mm-hmm.
And she uses this great analogy of the oxygen mask on an airplane. You have to secure your own financial oxygen mask before you can help others.
Right.
So,
Makes sense.
yeah.
So what exactly does that financial oxygen mask entail?
Well, first and foremost, it's setting those clear financial goals. She's a big proponent of SMART goals.
Right.
Specific, measurable, achievable, relevant, and time-bound.
Right.
And she doesn't just talk about it.
Yeah,
She actually shares her own example of paying off $35,000 in student loan debt within 5 years,
Okay.
which is a pretty ambitious goal.
Yeah.
But she breaks it down into these manageable steps
Right.
and shows how having that clear target
Yeah.
really kept her motivated and kept her on track.
Yeah. I could see how that would be powerful, having that North Star to guide your decisions.
Right.
But goal setting is just one piece of the puzzle, right?
Yeah.
What else is crucial in Lowry's pre-investing checklist?
Next up is something we've all heard before,
Okay.
but it's worth repeating. It's emergency savings. She recommends having at least 3 months worth of essential expenses
Okay.
tucked away in a safe and accessible account.
Mm-hmm.
This isn't just about being responsible.
Right.
It's about protecting yourself from having to tap into your investments prematurely
Yeah.
if an unexpected expense pops up.
It's like that safety net that lets you sleep better at night, knowing you're prepared
Yeah,
for those financial curveballs life throws your way.
exactly.
Yep.
And along those lines, Lowry reminds us not to overlook the power of employer-matched retirement plans,
Mm-hmm.
like a 401k if you have access to one.
Yeah.
It's basically free money,
Yeah.
a bonus just for saving for your future.
I remember when I first started working and had to choose my 401k contributions.
Ah.
I was so overwhelmed by the options.
Mm-hmm.
It felt like a whole new language.
Yeah.
I had to learn.
It really is. It's like learning a new language.
Right.
And that's actually something that Lowry addresses head on.
Okay.
She dedicates a whole chapter to breaking down those key investment terms and concepts.
Mm-hmm.
And she does it in a way that makes it feel less intimidating, even fun at times.
Oh, you mean like her analogy of comparing asset classes to different styles of beer?
Exactly. She compares, IPAs and lagers and stouts
Right.
to different types of investments
Yes.
within the broader asset class of beer.
Okay.
And it's such a simple, relatable way to grasp the idea
Right.
that, different investments share common characteristics, but also have their own unique profile.
I love that.
Yeah.
It makes it much less daunting.
Yeah.
But let's be honest, even with a basic understanding of the terms,
Yeah.
the whole concept of investing can still feel a bit overwhelming,
Mm-hmm.
especially when you hear stories about people making
Yeah.
or losing huge sums of money in the stock market.
I know. And she addresses that head on.
Okay.
She emphasizes that while there are risks involved, investing isn't about gambling or trying to get rich quick.
Right.
It's about building wealth slowly and steadily over time.
Right.
And that brings us to one of the most powerful
Okay.
and magical concepts in investing.
Yeah.
The magic of compound interest.
Oh, yeah.
Compound growth.
That's where the story of Jake and Stacy comes in, right?
Yes.
The two friends
Mm-hmm.
who illustrate how starting early,
Mm-hmm.
even with small amounts,
Yeah.
can make a huge difference in the long run.
Yeah, that's a really powerful story and a powerful point to make.
Right.
So Jake starts investing in his 401k early,
Okay.
putting in a modest $1,800 per year
Okay.
for 10 years,
Okay.
and then stops but leaves the money invested.
Okay.
Stacy, on the other hand, waits 10 years to start,
Got it.
but contributes a much larger sum, $4,200 a year for the next 26 years.
Wow.
Guess who ends up with more at retirement?
Let me guess. Jake?
Yes, you got it.
Wow.
Despite contributing far less overall. Jake ends up with significantly more because his money had more time to grow and compound.
Right.
So Lowry shows us that Jake ends up with nearly $481,000,
Yeah.
while Stacy falls short by $319,000.
Wow.
Yeah.
That's a pretty compelling argument for starting early, even if you can only invest a small amount.
Exactly.
It really highlights the power of time in investing.
Absolutely.
Yeah.
Time is really on your side when it comes to investing. So
Right.
the earlier you can get started, the better.
Yeah, and it doesn't have to be a huge amount.
No.
But let's face it, starting early is only half the battle.
Mm-hmm.
Investing can be an emotional roller coaster, right?
Totally.
How does Lowry address the fear and anxiety that can come with watching your hard-earned money fluctuate in the market?
She's very upfront about it. She shares a story about her friend Hazel,
Okay.
who had a near meltdown
Oh,
just 6 weeks after starting to invest.
okay.
Hazel saw red numbers in her portfolio and she panicked, thinking she'd made a terrible mistake.
I can relate to that feeling.
Oh, yeah.
The market can be volatile, and it's easy to get caught up
It is.
in those short-term swings.
Yeah.
So how does Lowry sort of advise us to get through that?
She dedicates a whole chapter
Okay.
to managing risk and, more importantly, managing your emotional response to risk.
So what are some of her tips for protecting yourself from, well, yourself?
One of the first things she recommends
Okay.
is separating your accounts instead of constantly checking your investments,
Oh,
which
okay.
can amplify anxiety during market dips.
Mm-hmm.
Lowry suggests keeping your everyday banking
Yeah.
and your investments
Yeah.
at separate institutions.
Yeah.
Out of sight, out of mind, as they say.
That's a great tip.
Yeah.
What else?
She also emphasizes the importance of having that emergency fund we talked about earlier.
Okay.
That financial cushion
Mm-hmm.
can provide a sense of security and prevent you from making impulsive decisions with your investments.
Yeah.
Yeah. When the market inevitably takes a downturn.
So it's back to that oxygen mask analogy again.
Yeah.
Secure your own safety first.
Yes.
Okay. What else does Lowry suggest?
She offers this really interesting tip that I haven't heard before.
Okay.
Give your investment accounts goal-related names.
Really?
So instead of just investment account number
Oh,
one,
great.
call it your dream home fund or your European adventure account.
Oh, I like that.
Right.
It helps you connect to the bigger picture
Mm-hmm.
and stay focused on your long-term goals
Right.
rather than getting caught up in the day-to-day market noise.
Exactly. And finally, she's a big proponent of automation.
Okay.
Set it and forget it, as they say.
Right.
Automating your contributions takes the emotion out of the equation and ensures that you're consistently investing regardless of how the market is performing.
It's like building that financial muscle memory, making investing a habit rather than a chore.
I love that analogy.
Right.
That's a good one.
Now, you mentioned 401ks earlier,
Yeah.
and I know those can be a bit confusing,
Oh, yeah.
especially for someone just starting out.
Mm-hmm.
Lowry shares her own experience
Yeah.
of feeling completely overwhelmed by the options.
Yeah, she did.
Does she offer any guidance for
Mhm.
navigating that world?
Absolutely. She dives into the basics,
Okay.
explaining the difference between a traditional and a Roth account,
Right.
how employer matching contributions work,
All right.
and what those pesky vesting schedules all mean.
It's like having a personal finance decoder ring.
Yes, it is.
And then there's the question that I think many young adults grapple with.
Mm-hmm.
Should you invest while you still have debt, like student loans?
Right.
Lowry tackles this head on, sharing her own experience
Yes, she does.
of choosing to invest while still carrying student loan debt.
It's a common dilemma,
Mhm.
and there's really no easy answer.
Right.
She explores the arguments for both sides,
Mhm.
prioritizing debt repayment
Right.
versus invest, and ultimately emphasizes that it's a personal decision
Yeah.
based on your individual risk tolerance, interest rates,
Hmm.
and financial goals.
She also highlights the importance of refinancing debt
Yes.
to potentially lower those interest rates. She even shares her own story of refinancing her student loans and saving a whopping $200 per month.
That's significant.
Yeah.
Yeah.
It really underscores the potential benefits
It does.
of actively managing your debt.
It really does. And, Lowry doesn't shy away from sharing her own investing missteps either.
Oh, really?
Yeah. She talks about her experience with individual stock picking, specifically her decision to invest in lithium.
Oh, I remember that story.
Yes.
She thought she had done enough research.
She did. She thought she knew the industry
Right.
well enough
Yeah.
to make a smart bet.
Right.
But as she honestly admits, it didn't pan out
Yeah.
as she'd hoped.
It's a valuable lesson in
Yeah.
the importance of diversification and not putting all your eggs in one basket.
Exactly.
Yeah.
And that's where the concept of spreading your investments
Oh, right.
across different asset classes,
Mhm.
industries, and geographic regions
Yeah.
comes in. It's about mitigating risk
Right.
and building a portfolio that can weather those market storms more effectively.
And Lowry even breaks down the differences between robo-advisors
Yes.
and traditional human advisors,
Mm-hmm.
explaining the pros and cons of each.
She does.
I find the rise of robo-advisors fascinating.
Yeah.
They've really democratized access to investing,
Yes.
making it more affordable
Yeah.
and user-friendly.
Yes, the low fees and the automation
Right.
can be very appealing.
Hmm.
But as Lowry points out,
Yeah,
they do lack that personal touch and customized advice
right.
that a human advisor can provide.
So the best choice really depends
It does.
on your individual needs and comfort level.
And for those who are interested in aligning their investments with their values, Lowry also delves into the world of impact investing and socially responsible investing, or SRI.
It's about investing with a conscience,
It is.
supporting companies that are working towards positive social
Mhm.
or environmental change.
Right. She gives examples like choosing to exclude tobacco companies from your portfolio
Right.
or seeking out investments that align
Okay.
with the UN Sustainable Development Goals.
So you're not just growing your wealth,
Right.
you're potentially contributing to a better world at the same time.
Yes, you are.
But I know some people worry that impact investing might mean sacrificing returns.
That's a valid concern,
Yeah.
and Lowry addresses it directly.
Okay.
She points to data showing that this isn't necessarily true,
Okay.
but she still emphasizes the importance of diversification,
Good.
even within impact investing,
Yeah.
to manage risk effectively.
Now, Lowry also dedicates a whole chapter
Mhm.
to something that can be a bit scary
Yeah.
for new investors.
Yeah.
Market downturns.
Mm-hmm.
She reminds us that what goes up must come down.
At least temporarily.
And she doesn't just gloss over it.
Okay.
She dives into the history of market crashes and bubbles,
Wow.
from tulip mania in the 17th century
Okay.
to the more recent dot-com bubble burst.
It's a reminder that market downturns are a natural part of the economic cycle,
They are?
and we shouldn't freak out when they occur,
You shouldn't.
right?
No. Lowry emphasizes the importance of staying calm, remembering your long-term investment strategy, and perhaps even viewing downturns as opportunities to buy stocks at a discount.
It's about having that long-term vision and not getting swept up in the short-term noise.
It is.
Now, for those of us who are intrigued by the habits of the ultra-wealthy,
Okay.
Lowry offers some fascinating insights into the mindsets and strategies
Right.
of successful investors.
Yes. She shares some common traits that she gleaned from interviews
Okay.
with financial professionals,
Okay.
emphasizing that they often prioritize legacy over quick gains. So they're playing the long game, thinking about how their wealth can impact their families and future generations.
Sure.
And Lowry points out that they're also hyper-focused
Mm-hmm.
on resource allocation and tax efficiency.
They are.
They're not just thinking about how much money they make,
Right.
but how much they keep and how it can work for them over the long term.
And Lowry also dives into the darker side of the financial world, sharing her own cautionary tale about her husband's experience with a whole life insurance policy
Okay.
that wasn't all it was cracked up to be.
It's a great reminder that even savvy people can fall prey to financial scams or misleading sales tactics.
Oh, they can.
She stresses the importance of being skeptical,
Mm-hmm.
asking the right questions,
Right.
and doing your due diligence before making any financial decisions,
You have to.
especially when it comes to choosing advisors
Yeah.
and investment products.
Right. And she provides some concrete steps
Okay.
that you can take to vet potential investments and advisors,
Okay.
including using resources like Finneray's broker check tool
Okay.
to look up the background and
Right.
disciplinary history of any broker or investment advisor.
It's like having a financial watchdog at your fingertips.
It is.
And she emphasizes the importance of verifying credentials,
Yes.
making sure you're working with someone
Right.
who has the proper qualifications
Mm-hmm.
and a solid track record.
She also encourages asking tough questions.
Okay.
Don't be afraid to grill potential advisors
okay.
about their experience, their fees,
Right.
and their investment philosophy.
It's about being an informed and empowered investor, not just blindly following someone else's advice.
It is. You're in charge.
Now, let's say you've built your portfolio.
Mm-hmm.
You've weathered the market storms.
Yeah.
And now you're thinking about selling an investment.
Okay.
Lowry dedicates a whole chapter to this final stage
She does.
of the investing journey, outlining when and how to make that move.
One of the key points that she emphasizes is the importance of understanding the tax implications of selling.
Right, and she even suggests that sometimes it might be more beneficial to sell gradually
Right.
rather than all at once
Yeah.
to minimize market impact
Yeah,
and potentially spread out your tax burden over time.
exactly.
And she reminds us that selling at a loss isn't always a bad thing.
It's not. It can be a valuable learning experience.
Right.
Providing insights into market dynamics and potentially even offsetting capital gains from other investments to reduce your overall tax liability.
It's like turning those financial lemons into lemonade.
I love it.
Right.
Yeah.
Lowry's book really covers the full spectrum
It does.
of the investing experience, doesn't it?
It really does. And one of the things I appreciate most
Yeah.
about her approach is her emphasis on the psychological aspects of investing.
Oh, absolutely.
Yeah.
I think so many people underestimate the emotional roller coaster that can come with watching your hard-earned money fluctuate in the market.
Yeah. It is an emotional roller coaster for sure.
It can trigger fear,
It can.
greed, doubt,
Totally.
all sorts of other emotions that
Yeah.
can lead to irrational decisions.
Absolutely.
That's why Lowry stresses the importance of having a plan,
Yes.
sticking to it,
Right.
and not letting your emotions drive the bus.
And she reminds us that everyone reacts differently to market ups and downs. There's no right way to feel.
Right.
And it's okay to feel a bit rattled when things get volatile.
Yeah.
We're human. It's human nature to feel those things.
Now, Lowry also delves into this concept of resource allocation, which I found really interesting.
Yeah.
She points out that wealthy individuals often think in terms of allocating not just their money, but their time
Right.
and energy as well
Yeah.
in strategic ways to maximize their wealth-building potential.
It's a more holistic view of wealth management,
Right.
recognizing that financial success isn't just about making smart investments,
Right.
but also about making wise choices about
Yeah.
how you spend your time, your energy,
Right.
and your attention.
She gives this example of a high earner who was hesitant to invest because she was pouring so much of herself
Yeah.
into building her business.
Right.
It highlights the trade-offs we sometimes have to make
We do.
when allocating our resources.
It's a reminder that there's no one-size-fits-all approach.
Right.
The best strategy for you will depend on your individual circumstances,
Great.
your goals, and your priorities.
And Lowry reveals that many wealthy individuals have this generational preservation mindset.
Oh, yes, they do.
They're not just thinking about their own financial well-being,
Right.
but how to protect and pass down their wealth to future generations.
Yeah, it's about building a legacy that lasts,
Right.
ensuring that their financial success can benefit their children, their grandchildren, and,
Right.
and beyond.
Right. And Lowry dives into some of the tools and strategies they use to accomplish that, like trusts and grantors, retained annuity trusts, or GADers.
It can get a bit complex,
It can.
but it highlights the strategic thinking that goes into preserving wealth
Right.
over long periods.
Right.
Yeah,
And Lowry's book does a fantastic job
it does.
of demystifying
Yeah.
these often hidden aspects of wealth management, making them accessible and understandable
It does.
for the average investor.
It reinforces the idea that investing isn't just about accumulating money.
Right.
It's about building financial security,
Yeah.
achieving your goals, and creating a future that aligns with your values.
It's almost like Lowry is saying that investing is a form of self-care,
Oh, I like that.
isn't it? You're taking care of your future self, making sure you have the resources to live the life you want,
Yeah.
whether that's financial independence, pursuing your passions, or simply having that peace of mind
Yeah.
that comes with financial security.
I completely agree. It's about shifting your mindset from feeling overwhelmed by finances to feeling empowered to make smart choices that create a brighter financial future.
And one of the things I love about Lowry's approach is that she doesn't shy away from the realities of the investing world,
She doesn't.
both the good and the bad.
She's incredibly honest about her own investing journey.
Yeah.
She talks about the mistakes she's made and lessons she's learned along the way.
Yeah, it makes the whole process feel much less intimidating
It does.
for those of us who are just starting out.
It does. It makes it feel more human.
Right.
It's like,
Yeah.
okay, someone who's an expert
Yeah.
can make mistakes too.
And she's not afraid to say, hey, I lost money on this one.
I know. I love that.
Yeah.
I love that she's so open and honest about it.
It's like she's giving you permission to not be perfect,
Yeah.
to learn as you go,
Mm-hmm.
and to ask for help when you need it.
Absolutely.
Yeah.
And she provides so many resources, too.
Oh, does she?
Yeah, she does.
What are some of her recommendations?
She has a whole list of resources at the back of her book
Oh, well,
for continuing your financial education,
Yeah.
like, books and podcasts,
Right.
websites, apps. She really runs the gamut.
okay.
So she recommends everything from classic finance books,
Okay.
like The Ascent of Money by Neil Ferguson,
Okay.
to podcasts like Paula Pant's Afford Anything and Jill Schlesinger's Better Off.
It's like having a curated library
Yes.
of financial wisdom at your fingertips.
It is.
Okay, great.
And she even suggests some YouTube channels for those who prefer a more visual approach to learning.
That's good because not everyone learns the same way. Right.
Exactly.
Yeah.
Yeah. You got to find what works for you.
And, one of the most important takeaways from Lowry's book,
Yeah.
for me at least,
Mm-hmm.
is her emphasis on the fact that investing isn't just for the wealthy.
It's not. And that's such an important point to emphasize because I think a lot of people feel like, oh, this is only for people who already have a bunch of money.
Well, it's not for me. I'm too broke.
Right, exactly.
Yeah, right.
But she really emphasizes that anyone can invest and that even small amounts
Yeah.
can make a difference over time.
And she even quotes Jill Schlesinger,
She does.
who says, investing is, in some regard, a wealth equalizer.
I love that.
It's a powerful statement
It is.
that highlights the potential for investing to level the playing field and create opportunities for everyone.
Absolutely. And it's not a sprint.
Yeah,
It's a marathon.
that's a great analogy.
So you just got to keep pace
Yeah.
and just keep going.
And celebrate those small victories.
Yeah.
Right.
You got to celebrate them.
It's about building those healthy financial habits one step at a time.
Yeah.
And remember, even if you make some mistakes along the way,
It's part of the process.
that's all part of the learning process.
Yeah.
The important thing is to keep moving forward
Keep learning.
and keep growing your financial knowledge.
Yeah.
So, as Lowry encourages us to do, let's keep leveling up our money game.
Yes.
One smart investment at a time.
One smart decision at a time.
And remember, investing doesn't have to be daunting. With the right knowledge
It
and
doesn't.
approach, it can be an empowering and even enjoyable journey.
It can be. I think she really proves that. in
Yeah.
the book.
Well, thanks for joining us for this deep dive into Broke Millennial Takes on Investing.
My pleasure.
We hope you found it helpful and maybe even a little bit inspiring.
Yes.
Now go out there and start building that brighter financial future for yourself.
You got